Hi, everybody. Most of you probably know me from previous NIPE events. If you've not been to a NIPE event before, welcome. You're in for a treat. As I say confidently, as the one of the guys who've been involved with NIPE since the beginning. My name is David True. I'm currently the president of NIPE, and we do these events once a month. And at some point, we'll get back to doing in-person events, which we did regularly prior to the pandemic. But these work very, very well, given it makes it easier to gather people from disparate places when you don't have to be there physically. Anyway, that's NIPE. NIPE has been doing these things since, gosh, 10, 12 years now. Since 2006 initially, and NIPE started with a couple of hiatuses and do them in all sorts of topics. Again, if you don't know NIPE, you can go up on our YouTube channel and see an example of some of the events we've done in the past. As we get started, I wanted to thank our sponsors. Thanks to Davis Wright Tremaine and to Further Advisory, both of whom make what NIPE does possible. I'll mention a couple of housekeeping items as we go through this. First, if you're interested in questions, please use the chat. If you're not a presenter, and most of you will not be, then please turn off your camera and microphone so the focus can be on those people talking. And there's going to be a Q&A at the end. We'll have 40, probably 50 minutes of discussion, a Q&A, and that will be followed by a couple of breakout sessions, which will allow each of us to interact in a smaller, in a smaller magnitude, I guess, with the folks who are around the meeting. So stick around for those breakout sessions, sort of our virtual networking group. And with that, again, I'd like to welcome you to this fantastic session on a very, very temporal, important topic at this time, faster payments and the secrets behind faster payments. And to get things started, I'd like to turn off to our wonderful moderator, Miriam Sherrill.
Sure. Thanks, David.
No
Welcome.
worries.
I am super excited to moderate this panel, not just because of the topic, which is near and dear to my heart, but because I actually knew all the panelists. So we got a really fun crew who are experts in the subject. It's also 6 p.m., which means this is the best excuse ever to get out of bedtime routines in my house. That being said, if you hear yelling and screaming, that's because I'm the only one who can do bedtime routines in this house. But we are going to talk about something way more fun. So we're going to talk about what it takes to implement faster payments. So we're going to focus a bit more on the product side. Technology will probably come into it because you can't really separate the two, but we're going to try to talk more about the product and kind of operation aspects of it as well. Before we go there, I'm going to introduce myself and then ask the panelists to introduce themselves, give a little bit of background, and then we'll get into the meat of it. So I'm Miriam Sherrill. I am the head of product for US for Form3. So Form3 is a company that is focused on providing payment platform technologies globally around the world. So we're in Europe and the UK, and we're entering the US space and really focused on faster payments. We support all the rails, but faster payments and everything that comes with it, which is what we're going to talk about today, is really the focus point for us with all those kind of 24/7 requirements and resiliency and such. So it's about modern technology and how to bring that to banks to help them get on this journey fast. So I will do my part quick so we can get to the meat. I may point at people because I have no way of going around the screen. So we will start with Phil because he's right in front of me.
Awesome. Thanks, Miriam. So I'm Phil Sprague. No, I'm not Allison Baller. I'm the secondary substitute for Allison, who had to be away today. A little bit of background on myself. I'm with the Federal Reserve and responsible for essentially the small task of onboarding our 8,000 to 10,000 financial institutions across the U.S. For FedNow. And it's a super exciting opportunity. I've been with the Fed for now 2 years, a little over 2 years, which those of you who have worked with the Federal Reserve in Fed time is actually 5 minutes. So super relatively new to the Federal Reserve. I had the pleasure of working with Miriam in her former stop over there. Also spent 25 years prior to that in the private sector. And one of my favorite accomplishments in that time is I'm actually one of the founders of PayCLT. So Dean and team are really doing a great job of carrying that banner forward in its new vision as an organization, but been around payments for a long time here and was involved in the launch of all the real-time schemas that are out there in market today. So super excited and thanks for having me. Cool. Maybe Dean, I'll go to you.
Hey, that sounds good. And Philip, it's good seeing you again. Yeah, so I'm Dean Nolan. I am the Director of Faster Payments at Fifth Third Bank. Have been leading our journey here for the past 3 years. As a bank, we went ahead and we've actually implemented real-time payments on the RTP network starting in 2019, letting our customers receive them. In 2021, we started originating, and then most recently, we've been piloting with customers doing requests for pay as well. And then this year, we started our FedNow journey, and I've gotten the opportunity to work with Philip and folks on his team there as well. As Philip said, I'm also the Executive Director of PayCLT, which is a partner organization, or I guess we'd call it a partner organization of NIPay, but just really happy to be here and looking forward to the discussion tonight. So Todd, it looks like I pass it off to you from here.
Thanks, Dean. Excuse me, Todd Kern with Bankers Bank. Just a little bit of background about our organization. We are a correspondent. We process for about 600 community banks from 30 million to about 10 billion in assets across the upper Midwest. Last year, we processed about 843 billion in payments. We joined RTP June of 2021 as the first funding agent supporting receive. And then we started our journey to send with settlement and liquidity December of 2020. We are a FedNow pilot participant. And before I joined our organization, I spent 17 years selling for a variety of processors. So very excited to be here, very excited about the journey to instant for financial institutions and businesses, because it's going to be a game changer with finality and minimal exceptions and all the things that it brings to the table.
Thanks, Todd. Okay, so first of all, every time that bell goes off, how many of you are going to like jump? Because I'm going to do that every time. But anyways, we set the stage. So we've got the scheme or the rail. So Phil from FedNow joining us. We've got a Bankers Bank and correspondent, community bank viewpoint, and a large financial institution. So kind of full circle. And I'll moderate and present the service provider piece of this as well. So with that, we're going to start with that really broad question to you guys. So what are those key factors, right? When you have to integrate into a real-time payment scheme, which is really, really new, especially in the US, what do banks and organizations have to consider as they start on this journey? And Dean, maybe we'll start with you from kind of that larger financial institution perspective.
Well, thanks. Yeah, I'd be glad to go through that. So, I think the starting point is going to be your technology platform. I know we're not going to spend a lot of time there, but really it is helpful. You have to figure out how you're going to process, who you're going to process with. Is it going to be on-prem? Is it going to be in the cloud? Who the service provider? And there's a lot of discussions that go into that. But once you get past that, then it's really more, I call an implementation strategy that I would call crawl, walk, run. The crawl side of it is receiving and getting your bank set up to receive payments. That is going to take you down, that's going to take institutions down the path of learning how to manage a 24/7 environment when their other platforms or some of their operational procedures aren't designed to go 24/7. And then the next step after that, I always thought was moving into the sending or origination perspective. This one, you take all of those learnings that the bank would have gotten from working in 24/7 and doing the instant payments. Those learnings now have to be taught to your corporate customers who are going to be doing the origination, because they have the same challenges. If you're dealing with a middle market, large corporate customer that has a treasury department, in all likelihood, nobody's treasury department operates 24/7 today. But if they're going to start supporting 24/7 payments, they've now got to figure out, what do you do when a payment comes in on a Saturday that you need to post somewhere? Who's going to do it? And then from a bank side, you venture into the whole irrevocability space, right? And the finality, I think, Todd, as you referred to it. And that's a different environment. And now you've got to develop all of the appropriate procedures and put in place around irrevocability. Compliance comes into play. As when you think through irrevocability, that means that once the payment goes out the door, it's gone. And there's some mechanisms to get it back, but they're more polite asking to see if someone will give it back to you, which is a challenge. You got a compliance aspect that goes into it, be considered. And then I'd say the run portion of it is really getting into request for pay. and going through everything that's going to happen in that space. And there's just, frankly, that's potentially the largest opportunity around instant payments, but it's the one that's going to have the most challenges around it, because you're really getting into an environment now where you're encompassing everything about payments, consumer origination, consumer protections, irrevocability. There's a lot that goes into that. So I know we can go into each one of those alone probably warrants an hour discussion, but just for this take, I'd stop it there and just say it's really consider that path of working through those in progression so that you as an organization can take on those learnings and then take those learnings and share them with your customers who are going to need to use those in order for them to use the payments effectively.
Yeah, that last point is something that, at least for me, resonates. I think everyone we talk to is, there's the bank and everything you think about, but then they forget there's the customers at the end of the day, whether it's corporates or not, who need to go on that same journey with you. And if you can do it all, but then they're not along for the ride, it doesn't help. So I think it's crawl, walk, run with them. It's a really good point. Todd, what about your perspective, having done this with RTP and what you shared about being the first funding agent?
Education. I was lucky. The funding agent was built. We were going through final certification. So as I'm leading our team through FedNow, it's a lot of internal meetings, and you don't realize what other areas of an organization are impacted with the move to instant. Dean hit on it. You start getting into liquidity, you start getting into end of the day. Our organization has been educating our community banks on RTP and FedNow for 3 years. And, I think, personal opinion, FedNow announcing the go live has lit a fire under institutions that they need to do something. But, you just don't turn on instant without a lot of internal planning, and then talking to the external stakeholders of the organization that are going to benefit from the adoption of instant by a community financial institution.
Yeah, that's a really good point. And you did call out the FedNow lighting a fire. So pretty good segue for me to poke at Phil a bit on, what Dean and Todd said. Is that resonating? Is that what you're hearing from everyone? Or is there other aspects of this that banks are talking to you about?
Yeah, I think it does. It resonates definitely across all the customers we're talking to, right? As we see partners in market, whether it's a direct or larger financial institution, medium or smaller tier institution, those being supported by a service provider or a banker's bank, corporate credit union, in Todd's case, right? We're seeing that diversity of participation. But what is clear and consistent across the board is, I think, some of the points that Dean and Todd touched about, which is 24/7 by 365, real-time solution, settlement, treasury, liquidity, all of those elements there, which are really important. And then the one that comes up a lot, obviously, in market is fraud, and the notion and understanding of those implications. It's interesting. One of the messages we try to relay to folks is, and Dean, you used this terminology as well, the crawl, walk, run is really important, but know where you're running to, understand what that journey is going to be like, and then understand how you're going to crawl, walk, run to get there. And make sure internally, as folks are selling their business cases, that all this doesn't happen at one time. And in a lot of these cases, there's already elements of the business that they're doing today. And one of the great examples we use is, folks get really nervous about 24/7 by 365. And the first question we often ask is, hey, who among you has an ATM system, right? You're already running some elements of that. What can you learn? What can you bring forward in those dialogues? And how can you use those learnings as you move forward in real-time payments? So it really is a journey for a lot. And I think folks are definitely on a different, everybody's in a different place in that journey. And we're super excited as we move forward.
Yeah, I guess one thing for me that nobody here mentioned, but when I joined Form 3 as a newer provider, there is a lot of thinking about, well, there's nobody out there who can support this. There aren't a lot of vendor solutions. The ecosystem is not built out. So I think another thing is kind of do your research. There are providers out there. There are providers getting into this space. The FedNow announcement, FedNow coming to launch, is helping that, because a lot of different organizations want to catalyze around that. So for depending on the bank or what you're looking to do and where you are on that journey, do your research. There are vendors out there that can help as well. So you don't have to do it all on your own is another potential. Todd and Dean, you actually both mentioned this, but Todd, I'll ask you to kick us off because you really touched on your role in this space, but we talked about the 24/7. So obviously the receive and send, then there's all sorts of stuff you can do after that, but settlement and liquidity, right? So 24/7 liquidity is a huge topic. I know I'm on an operational work group for the Faster Payment Conference. This is like all we talk about. So what do you think around settlement and liquidity? And I think your role as a funding agent versus FedNow, talk to us a little bit about that. He laughs at my question. Always good.
Wow. Look, liquidity is definitely a challenge. And I've heard internally, is there really a liquidity challenge or is there a deposit pricing challenge within financial institutions? We're in a unique position, having been on RTP now for 3 years and having built a funding agent solution so we can see the debits and credits flowing in and out without having to log into the clearinghouse portal 24/7. And, that makes a difference for us because our team can actually be at home monitoring when we get a low watermark and those type of things, which makes a huge difference for us. But there's settlement differences between the two payment rails, and there's a risk with both. But for Dean and I, if we happen to forget to fund up for a weekend with RTP, our customers can still receive transactions. Their outbound debits may not go through, which is embarrassing, but we don't have to worry as bad if we forget to fund up because there's guardrails in place with RTP. FedNow is working to close some of those gaps. But liquidity is definitely an interesting challenge, and the clearinghouse has been a great partner to work with. The Fed has been a great partner to work with around settlement and liquidity, and there's cool things that they are bringing to the table to help adoption between community financial institutions. So we don't have a 20-year wait like we did with ACH. So that's really cool. And settlement and liquidity will work themselves out over time.
Yeah. Well, I guess, and you can, Dean, you can chime in on this as well. I think what we've been hearing, what we've been learning is there's just the fact that there is liquidity moving around the weekends. And during these times, that's different. And so maybe even thinking about your crawl, walk, run approach, and how can you use that in thinking about settlement and liquidity potentially, right? Receive is one piece, probably a little easier. Nobody minds receiving money. That being said, you also don't want money just sitting around, and then sends a whole new flavor. So anything to add, Dean, as far as considerations on this?
Yeah, just a couple of things. I agree with you. I'm glad you brought up the crawl, walk, run approach to it. And what we found is, when you start off with receive, you do have to put in place all of the procedures to, settle and to do everything you're supposed to do and book those entries to your GLs and everything necessary. But to Todd's point, you're not really worried about funding up for the weekend. You're worried about sweeping money out. So if you happen to miss something and you leave a little bit of extra balance in there, you'll miss out on an investment, but it's not the end of the world. You're not bringing customers down or anything. When you get to the send side, that's where it gets a little more gets a lot more challenging, because if you aren't funding up, you can cause a problem with your customers. And then if you're also requiring that your customers keep good funds on hand, well, then they also have to go through that funding up procedure themselves on a Friday. And I think one of the things I'd add to this that we really became apparent to us is we started to have customers looking at use cases where there was another mechanism out there, another network potentially settling with them. Think merchant acquiring, for example, where those networks only are settling 5 days. So if you want to provide funding over a weekend, well, to your merchants, well, now you're basically that, you're now having to there's additional funding that has to come in place, right? Somebody's got to make that money available before the money comes on Monday from the weekend settlement. So you just there's a lot that has to be thought through, and it's really a matter of, looking at your use cases end to end when you're setting this up and going through the liquid, almost doing a little journey map of where the money's going to move through this whole liquidity process to make sure that you've got all the dots, everything covered, because it is different. You wouldn't think going to 7 days is that crazy different, but it is very different. And then I think Philip will probably talk a little bit on how FedNow is doing it, because they're doing it a little bit different. And I think creating some benefits, but a couple of challenges as well. And I can jump in on those after he talks.
Well, that was a segue, Phil, that I don't even have to chime in on.
Yeah, perfect. So I think from the Federal Reserve standpoint, right? So a little bit different in the fact that one of the things we've heard from our customer base is the need for simplicity, right? And so one of the design points of FedNow is direct settlement in the customer's master. Now, what that means is there's a simplicity in the solution, in the fact that all of their Fed payments are going to be settled in that master account. It also does support, to Todd's point earlier, the infusion and inclusion of a banker's bank, a corporate credit union, also a settlement agent in the process, and a funding agent. So we have integrated what we call the liquidity management tool, which is a tool that allows on a 24/7/365 liquidity to be balanced at any point that's needed. And I think that was a key feature. That is a key feature of our upcoming launch. So we're super excited about that. Certainly, the realities of funding, to Dean and to Todd's points, right? They change based on where the customer is in the journey. And I talked a little bit earlier around who do you include in the process, right? Your chief financial officer should be always included in the beginning of the journey you're taking as a financial institution. I haven't met many CFOs who worry that much over a weekend that there's too much money in an account. Certainly there's implications of funding up if there's not enough, right? So I think understanding those journey points, and then to Dean's point, having the right planning in place, pushing towards ensuring understanding of what those needs are and how payment flows might change with the inclusion of FedNow. So we're super excited about what we're hearing, and the inclusion of critical partners like bankers, banks, corporate credit unions, and others in the ecosystem to make FedNow happen.
Yeah, so I'll sound like a broken record, Phil, but I'll jump on that piece. I mean, again, there are solutions, there are vendors out there that can help with some of these things. So there are definitely challenges, there are definitely differences. Nobody's going to argue there isn't, right, between the two systems. But if you're looking at providers who can help you in this space, so for example, like a gateway, if you're looking at someone who just does the messages for you, that's great. But then you still need, someone who does RTP messages and someone who does FedNow messages. But look for solutions that build something agnostic, that give you that feature and functionality that can help with liquidity. So if you have liquidity managed transfers from FedNow, and you've got funding up and down and watermarks or RTP, look for solutions out there that will offer you ways to solve for both one way instead of two different solutions. And they do exist. Form3's creating them, others are creating them, because that's the opportunity, frankly, for us, right? We can provide a solution that's one-stop shopping, then banks want it. And they're out there. So the differences, while very difficult sometimes for banks, can be opportunities for providers. Then it becomes opportunities for banks to use those providers who can solve it, one way.
And Miriam, if I can add, this will sound a little bit like a commercial, but I'm going to say it anyway. I think one of the things we've found on the FedNow side is a really large value in this tool we call the Service Provider Showcase. And part of the value of that showcase is not to say we have primary vendors or solution providers, but who's in the ecosystem that can help, right? And really providing a single place for our customers to go to look for those exact solutions out there and really see what's available to them in the market. And I think you'll see some of the players that we've talked about today in that space as well. So not to sound like a commercial, but I think we've really found value in that, in the fact that it's just a place to help folks understand how they can meet all the needs of their journey.
I don't think anybody said we're not allowed to do commercial. No, I think we probably are not allowed to do commercials. Let me ask this though, and I didn't, we talked about settlement and liquidity, but we really focused on the liquidity piece, if I'm being honest, as we just did that round. So maybe just to focus in, and I won't point to any one person and hope that someone's interested in talking about it, but the settlement aspect, so the irrevocability, the availability of funds, what about that aspect, especially on those off-hour times? How has that been for your organizations when you've had to implement that piece of it?
Well, from our perspective, doing settlement for RTP and, settlement for FedNow, the most important thing is that the community bank or the community financial institution, this is true for credit unions, is that, the transaction is posted in real time. The GL is updated at the core system level. The settlement happens instantly at us. Our institutions that partner with us like the idea that we're not forcing them to 7-day-a-week accounting. FedNow will force a community bank or credit union to 7-day-a-week accounting. RTP does the same thing. As a trusted partner for our institutions, they like the idea. It sounds kind of crazy, but we take that 7-day-a-week accounting, after Friday, a certain time, Saturday, Sunday, Monday, they have a credit waiting for them because we batch ultimately the settlement. The settlement takes place in real time, but we're batching it. And then they're just doing reconcilement from a banker's bank position to their core, which for most institutions is pretty easy. The customer feedback that we hear, it's huge. There is a merchant processor who will remain nameless. I bet our customers that go live on RTP that they'll have a disbursement from this one organization. And I make the bet so frivolous that they laugh at me, but there's a gas station chain in Iowa called Casey's, and they have this breakfast pizza. And I bet all of our banks that they will have a settlement day one, and I've not lost the bet yet. And in fact, one of our banks in Indiana still owes me breakfast pizza from a year ago. They haven't driven it from Indiana to Ohio because, when you join the rail, and remember, RTP and FedNow are a rail, and you have to have the ancillaries like a Form 3 or whatever to get that additional capability. But the rail updates your financial institution as an available routing and transit endpoint. And so, seeing those transactions come in on day one is huge for the community bank. And then they start word of mouthing that they have this capability, and the transactions just keep increasing. I was doing some reporting yesterday. One of our banks had, I think, 20,000 settlement transactions with us last year. So that means they had 20,000 transactions through their RTP connectivity partner. That's a pretty good amount of money that consumers and small businesses were able to move in, and more importantly, have availability of funds because of the finality. And I've not heard of any of our banks having to reverse a transaction and send money back due to an error.
So we went. Okay.
That's huge from our point of view. The exceptions are minimal, which saves time. Anybody who's been in, I'm an old check processing guy. Exceptions are brutal. ACH exceptions can take time. Check exceptions take time. The finality just makes things so much easier because that the payment's been sent, it's been received, you've received confirmation, boom, it's done.
So let me poke on that. Dean or Phil, even if you're hearing something, it's an interesting viewpoint. The finality makes it easier from an exception process. And I have heard that perspective, kind of like, well, nothing I can do, whatever it is, what it is. I have heard the opposite view, though, that it makes it harder, especially with real-time payments different from FedWire, right? Because here you got to finish the whole thing and post the money. You don't really have time to do much beyond that on the receiving side. So what are you feeling, Dean? Has it been easier, the irrevocability, or does it make the exception processing or some of the concerns harder?
I'll go with the politically correct answer and say both. And I do agree that in certain aspects it's easier because there's not as many exceptions. But when they do occur, then it becomes more difficult because the mechanism to help your customer when in that exception situation is it's a request for return of funds. And the key word there is request. you're asking for the money back. There's not a way to go out and take that money back. And I think it was Philip talked earlier about fraud and considerations with fraud. Almost as equal when you start talking about exceptions are mistakes, right? Customer systems will invariably send out a duplicate payment, or worst case, somebody who's processing batch might send out a duplicative batch, right? If you're doing that in ACH, you have a chance to figure out, oop, there was a mistake, and stop it and pull it back. In this case, you can't. It's sent, it's out the door. So, we're putting in place tools. We have in place real-time fraud screening before the transactions go out the door, real-time sanction screening, and we're adding to that checks to help customers look through the duplication and other things, to try to do whatever we can on our side to help our customers, and then subsequently educating our customers on everything that happens with this so they can do everything on their side to protect those situations. So when you start asking about the exception processing, yeah, there's less exceptions because it's irrevocable, but the work that goes in to make sure that the systems are bulletproof before the payment is sent out is a lot of extra work, and maybe extra work that hadn't been there when you were doing something with ACH that gave you a little bit of leeway to be able to claw that back before it really went out the door.
Yeah.
So
So
one thing I might add just to the conversations that I've had already is people are really starting to think about, how do we position this with our customers, right? And that may be our corporate customers, our consumers, et cetera, and really understanding. It's easy for us folks in the payment space to talk about this fun word called irrevocability. The average customer doesn't necessarily understand that, right? There's been precedents on other rails, whether it's card, ACH, wires, et cetera, where unwinding, they've seen as something that's possible, right? Or probable in most cases. And so really thinking about, how do you position this a little bit differently with your customer? And then to Dean's great point, putting those customer experience fail-safes, those process fail-safes in place to really help to minimize the number of times those quote unquote issues occur or accidents happen. So it's also something to think about. We talk to folks about that as they're beginning that journey, is how do you position that from a customer standpoint? How are you talking about it? And that really helps to simplify their solution.
and some of it, Todd, maybe goes back to education, like you mentioned, right?
Right.
Because there's legal and stuff around this that you really do want your customers to know.
And, regs are very important in the banking space. And Dean brought it up about clawback rights with ACH. If you were one of my community banks that's looking to go to send, they're thinking about it from, how do I maintain and grow my business relationships, which have lending relationships, versus what solutions am I offering my consumers? Most community financial institutions offer a P2P solution that's ACH based. So there's rights and privileges for the consumer, i.e. Reg E, versus those rights and rules don't apply to a business payment. So, I joke with our customers, and we just had a large sender come on, not in our traditional geographic area. And we have calls weekly about pre-funding for RTP. But I jokingly said to them, if you go into a small business and they have passwords on their computer screen, they're probably not a good candidate for instant send. But I said, if you're allowing your small businesses, and you've done the underwriting on ACH origination, you've done the risk rating on them and those type of things, and there's a younger person within the organization who gets irrevocability, who gets the finality of it, that's probably a good customer to pilot the send capability with. And there's a lot more systems that are in place in a business that, APIs and those type of things. But most of our customers are going to be sending through their business online banking, and, there's OFAC and all those type of things. But I go back to common sense banking 101 of, it's a risk rating of the customer. It's an underwriting, just like we do for ACH origination today. So there are other payment rails in the US that we have experience with that businesses are using today. And it's just upping that finality and irrevocability with them and making sure the businesses understand that. And the Fed has done a great job around videos. The US Faster Payments Council has done a great job with education on instant. So I see instant send more for a business than I do a retail customer because of Reg E.
So David posted a pretty good question that's very related, right? In a consumer facing environment where we're accustomed to being able to dispute a transaction, how do you position irrevocability, and does it limit the appeal? I mean, Todd, it sounds like you're saying it kind of does. Dean, Phil, thoughts?
Yeah, our thoughts is somewhat similar to Todd, that we've really focused on the business side for origination, and the consumer side and that irrevocability there, as well as is really popped up for us as we started looking at requests for pay, and that's really where the consumer now is going to be, in most cases, those are a lot of B2C bill pays. That's where the consumer is going to be originating that payment in response to a bill request. And that's where the whole yin and yang between consumer protections, which are going to be, have the ability to claw back that money in certain situations, and the network's core revocability, which really doesn't support that. And that's where a lot of things have to be worked out at the industry level to define how we're going to find that common ground that lets the network do what it's supposed to do, and lets receivers receive those funds and still gives the consumer the protections. I think there's a lot of work still has to be done on that side.
So it sounds like you guys really do think that business is kind of where we're at right now, but getting past that's going to take a little bit more time. Phil, that what you're hearing around the table of FedNow?
Yeah, I mean, I think certainly folks and Todd and Dean touched on most of the points. I don't have a ton to add. The one thing I would say is I think most folks are starting where they have the most comfort in the ability to, one, know their customer, two, with the types of transactions of those customers and how they tend to manifest themselves. The reality is that anchors folks typically to starting with a business, right? So I do think, to Dean's point, that as an industry, we have a lot of opportunity to evolve there. And I think there's a lot of learnings that are going to come, and not just from the clearinghouse's solution and FedNow's solution, but solutions like Zelle and other solutions in market that are, going to deal with these same challenges as we go forward. So taking my Fed hat off for a second and putting my payments industry hat on, I think that's a reality of evolution that we're going to have to push on collectively as an industry, or to Dean's point, we're going to kind of be stuck from a use case perspective in these narrower places, and we got to push the envelope collectively.
Yeah, I'll take you one step further. I probably had to leave the Fed to get this learning, but joining a global company, I think in the US, especially being a Brooklyner, so like a New Yorker, we're very into our way is the only way. And now I've joined a company with, FPS in the UK and SEPA Instant, and there's a lot we can learn from what other countries have done, how they've grown it. There's a lot of regulations there that are pretty darn similar, especially SEPA Instant, and where they're seeing their use cases grow and how they're pursuing that. Is something I think in the US we can learn from, and we can try to drive some of those same ecosystem solutions and things that are out there to help it happen. So I was definitely stuck in my US, potentially Brooklyn is the only part of this world that I actually understand mode, until I left and kind of realized there's a lot that we can learn from everything that's going on outside of the US as well. Dean, you touched on one thing that I was going to get to, so I'm going to pop right back there, which was request for pay, because we did talk about payments primarily because payments is what instant payments is about. But both schemes, right, RTP and FedNow, have things like request for return, request for information, and request for payment, which is a big one that everyone's talking about. Where do you think we're going to see that get used, and how do we think it's going to get utilized, and do we think it'll push and pursue other use cases to open up? And maybe I'll probe all three of you for whenever it's your turn, the timing of it, right? Like, it's available, it's going to be available with FedNow, unless Phil gives me this bad shake that yes, it's going to be available with FedNow. But what's the utilization like? When do we think the timing of it is really going to start to grow?
Yeah, so, well, I'll start with, I think it's potentially the biggest opportunity around instant payments. Just there's so many use cases when you start talking to corporate customers and they start brainstorming and thinking about where instant's going to impact their businesses. They end up in the receivable space pretty frequently with a lot of thought processes. And I'd break it down into maybe two somewhat related but different paths moving forward. One of them is going to be about using requests for payment for bill pay and in that recurring invoicing space. And that has with it, a need for a lot of information sharing to make sure the customer understands what the payment's for, things along those lines. And the other is going to fall into the pay by bank space, which is more of those single transactions and probably getting, over time, eventually moving itself down into the e-commerce and point of sale space. Philip, I think FedNow just released a video last week that talked about how FedNow worked. And the last 20% of that video was focused on e-commerce and point of sale and the use of requests for payment in that space. So I think there's just a ton of potential. But as we move into those channels, that's where in this crawl, walk, run perspective, that's where we view requests for payment as being the run, because when you start getting into bill pay and then you further get down into anything related to e-commerce and point of sale, there's a lot more you have to think about, a lot more considerations, a lot more processes you have to put in place to make that happen. So, I can just say from a Fifth Third side, we've enabled our API to originate requests for payment, and we've had a couple of customers who have been doing it in a short, kind of small, limited fashion as we're learning, and we're all learning together. But I think there's a lot of potential there, and I'm really interested to hear what Philip and Todd have to say about it.
That was prompt to Philip and Todd.
Go ahead, Todd.
Again, from a community financial institution, it's a little bit more tricky to pull off. Your community bank or credit union could originate a request for payment. And where I see it is for emergency services. You have a plumber, you have an electrician. These are very basic examples. Yes, a community financial institution could help originate one, but the trick with request for payment, in my opinion, is making sure the receiving institution has enabled it. So then the consumer can turn around and pay the request for pay. It's great to receive a notification that you owe money, but it's not great if you can't turn around and then submit the payment. A question came up through the chat, and I don't know if everybody saw it. It's done securely through online and mobile banking. So I originate an invoice, I push it through my community bank, it goes to the network routes it to the correct financial institution, it's delivered to the consumer through online or mobile. Yes, I could get a text, and Dean knows more about this, but I'm logging into my mobile banking. I'm logging into my online banking. So I'm just not clicking some random link. Again, there's a lot of education around it. But it's great to receive that notification of I owe money, for example, jokingly to Dean. But if I don't have a way to pay that, I'm just going to log into bill pay or something else and snail mail the money I own Dean. So there's a lot of
long time to get his money that way. Yep.
Correct.
Yeah.
We are actively looking at supporting it again. We can offer transactions for RTP. We can offer transactions for FedNow. Our niche is settlement and liquidity, but we're staying up on top of it because, our consumers need to know that their bank can support them for it if they decide to partner with a Fiserv or a Jack Henry or whomever for the capabilities. So we're excited about it because, I don't like writing a check for those random things. Nobody does. And again, we view it as emergency services or last minute payments for things, and, the merchant side, and that is really cool.
Yeah, I'll just add a couple of things. One, from a Fed perspective, at the end of 2022, we launched our RFP customer experience work group. And as a part of that, we had 100 or so organizations participate, with 30 that are a group that's been selected to really focus on editing and drafting those market practices. And Dean talked about this a little bit earlier. Todd talked about this a little bit earlier. Those market practices today, what we've seen thus far, are really focused on C2B in a lot of scenarios. I think they've made a ton of progress. We're going to see some progress, additional progress in the Q3 of this year. I do think one of the interesting things that we're seeing and hearing in market, and I'm going to blow up a little bit Dean's crawl, walk, run for a minute, because it's an analogy we've heard from folks, and it's a great question in the chat. We've actually heard some folks ask us, well, if we have concerns around send from a payment fraud perspective, and most of that is account takeover, and you have scams there as well, could our walk in our journey actually be RFP? You have some additional things you have to deal with from a technical perspective, but one of the interesting points of feedback there is if that RFP is a part of their walk journey and not a part of their run journey, they can actually get some early experience. So again, early feedback thus far, but we are hearing some folks saying, boy, it may be actually less complex than the implications to send are to our organization. The one thing I will say in all of that is, frankly, what's most important, and this is one of the core goals of the Fed's launch of FedNow, is ubiquity is key, right? You can't really launch an RFP service that is just too difficult without reach. And so really being able to reach to every community financial institution, whether large, medium, small, ensuring that that RFP that goes out, that's a request for payment, can reach its mark, right? And that's going to be a really important driver, I think, of the success of that, as well as that narrowing of use cases I talked a little bit about earlier with the focus group. So I don't know if that's helpful, but it is a little bit of a different insight we're hearing in market here more recently.
So Phil, is that the crawl would be, I can initiate a request for payment and also receive payment. So I'm not trying to send yet, but I can ask for money and I can receive that money as part of the crawl. So not accepting the request for payment, which might still be a little harder, than you have to send it. To Todd's point, if you could take it in, but you can't actually get anyone to send it, you're going to have a problem, but just adding it over there. So that makes
that combination of receive money and send a request for payment sort of helps to close that loop and gets folks more experience. Absolutely right, Miriam.
So you did prompt me for the one last question, which I think maybe I have time for, and it's a doozy, Phil, and it's for you. But with your point about ubiquity, there is, so the big question is, RTP's out there and FedNow's coming, so there's two rails. So should banks join both? Should banks join one? Should banks, what should banks be considering? And I think there's lots of good conversations that have happened on this topic, but you did bring up ubiquity, so I kind of have to ask this to you guys.
Sure. I think it's a great question, and we get it a lot, right? And two things I would say. One, it depends on where, shocker, Miriam, my answer is going to be it depends, right? But the reality of that is it depends where folks are in their journey, right? I think we're going to see a lot of institutions choose to go with both because they don't yet understand where the reach will be on both sides. They want to make sure they're going to get the right level of payments for their solution orientation. You're going to see others wait to see where the Federal Reserve will be from a reach standpoint, who the senders are on that network. You're going to have overlap. I think you're going to see a little bit of both of those strategies. So I didn't directly answer your question because it's a sticky one, but I think, frankly, as we go to market on the FedNow side, I think you'll see financial institutions start to make a choice. The other consideration there, and it is a reality, is this is not an inexpensive endeavor for community financial institutions, for mid-tier organizations. It's complex, and doing it twice is also complex, and it's more complex doing it both ways. It's not, I think there's a myth out there that it's the same implementation. It's not. It's different enough between the organizations that the work associated with this is going to be incremental. So I think folks will make a choice. Some folks will go with both. Some folks will go with one or the other, and some folks will essentially wait. And I think we'll see all of that in market. That's really what we're hearing from folks. I have a very biased perspective on that. I do think, which is an obvious one, right? But I think that goes without saying. I do think folks are going to have to make that choice. And Todd touched on this, and I'll hit this last point. A lot of financial institutions in the US are supported by a service provider, right? So in those scenarios, one of the weights that comes to play is what is the pricing, what is the cost structure to not only implement, but to maintain those two over time. So I do think folks will start in a place and that may evolve.
Right.
Yeah, maybe Todd, before I'll just chime in. I did a panel somewhere, and this was kind of the topic. So I was a little mean in asking this question, but the reaction in the room, which is probably the first time I did a panel where I actually had like lots of people stand up in the room to ask questions, was actually interesting for me. Again, coming from FedNow, having heard a lot about RTP, and then doing this service provider view of, well, actually, we'll support both so that banks don't have to make that choice potentially, right? Like if they are going to use a service provider, it's one API connection, then other than signing forms, we can kind of be on both networks. There was a lot of push on resiliency on this aspect. I think most of us in this space are hoping that faster instant payments becomes our entire career and we walk off with millions, which would mean instant payments becomes super critical infrastructure. And we all know once that's the case, everyone's going to want resiliency, right? And not count on just one rail. So I saw a lot of support for actually two rails and coming up with ways and solutions to connect to both rails in an easy manner. Because to your point, they're not exactly the same. So you can't just copy paste.
Right. From a community financial institution, we have been telling our customers for 2 years they're going to need to be on both rails for receive. There's not going to be interoperability for the foreseeable future. There are going to be RTP senders that are not going to join FedNow. There's going to be FedNow senders that aren't going to join RTP. So we are advocating to our banks that they get on both rails for receive, and you're going to pick a network to send off of based on doing an in-depth analysis of routing and transit numbers of where your wires are going, the dollar limits of those wires, and potentially ACH. You know, we have, what's really nice about the US is we have 2 sets of payment rails in the US. Yes, we have interoperability between the Fed and the TCH for checks, wires, and ACH. I'm confident in time we'll get there. You know, we are in mile 2 of a marathon on the journey to instant. But we are advocating to our community banks that they need to be on both for receive, because you don't want to lose out on those incoming payments for your consumers and small businesses, and then pick a network that makes most sense to your institution to send off of.
Yeah. Dean, did we miss anything from your perspective on this?
A couple of things I'd add. I agree with Todd. I know for the larger banks, you're going to be to the same point you just said. You want to be on receive for both. And in our perspective, we're going to be on send for both. And then we're building the middleware, if you would, or tools to make it seamless to our customers. So they're not going to have to pick or choose which way they go down. We'll help them. And that way we help our originators get to the most reach that they're looking for, because that's really what they're trying to do. Or they want to get to that 100% reach number. That's what makes this payment rail work great. And then I also think a little bit to what Philip was saying on the request for payment side. I'm fortunate enough to sit on the work task force that Philip talked about, and I also participate in some activities with the Clearinghouse and the Faster Payments Council. When it comes to requests for payment, there are a lot of differing opinions across those groups as to how they should work, the structure, the rules, everything that goes with it. So with that said, I think it's also logical to think that there may be a difference, in the request for payment space. There's going to be a need to be in both networks to handle the differences between that may pop up in the way things are handled in the request for payment space as well. So answer to the question, you got to be in both. As a bank, And then if you're a corporate customer, seek out a bank like Fifth Third that's streamlining it so you don't have to worry about this. All you have to do is think about instant, and then we'll take care of the routing in the back.
Yeah,
Yep.
routing I think is a big win, right? Think about intelligent routing as features and functionality. Okay, so as usual, I talk too much. But now I get to be like a game show host and do like lightning round of questions. No, I'm kidding. But I do see some questions in the chat. So I'm gonna read kind of one off out loud and see what you guys think. So if you want to answer, I don't promise to not chime in. I probably will. Also, to everyone kind of listening in, please feel free to put questions in the chat. I don't know if people could come off mute, so I don't know if you could come off mute after your questions. So you can just put them in the chat and we will read them out loud. So I'm going to ask the first one that I see. What will be the impact of real-time e-commerce POS payments on MasterCard and Visa volumes and associated bank interchange? Any thoughts? I feel like we have to go.
I'll jump in a little bit on that one. When you've talked to either the networks about their recent strategies, they're all moving towards this multi-rail strategy. So I think there's still a lot to happen in that space and figure out where payments are going to end up. I would say one of the things I've seen, I've been in payments my whole career, and it's very rare that you ever see a payment go away. Right? It just seems like we get additive new payments, and those additive new payments create new use cases. They may transform a particular industry. They may just be additive in another. They may have no impact in another. And an example I'll use, I was flying on a flight not that long ago, and actually it was a little bit ago, but I was flying on a flight, happened to grab a magazine before I hopped on, and in the back of it was an ad for online bartering. Right? And if you think back to the very first ever payment that we had, it was bartering, and we still have it, right? And you can go through all of the various forms of payments that have come and gone, and we just keep adding. So I don't know what the answer is going to be. I think you're going to see pay by bank with faster payments. There will be some use cases that make sense, and it's just going to be this, additive process is how I look at it.
The global data supports that, just so you know. I mean, we looked at UK and Europe, and okay, did FPS catalyze backs? And the answer actually was no. Total number of payments went up. So things didn't take over anything else. The whole thing, there were just more payments coming through. So that's kind of supports what you said. Sorry, Todd, were you going to chime in?
I was just chuckling on the barter. I'm an old check processing person, so I mean, payment rails don't die. Some of them do need to die. I think a wait and see approach around the debit and credit card interchange with Durbin and those type of things are going to be a wait and see around that.
So I said lightning round, right? So next one, because this is actually a really interesting one. Concerns on faster 24/7 money movement with bank runs and kind of the recent events. Any thoughts? Is this going to create a bigger risk for us? I think no answer is the right answer. I mean, I think with instant payments, just given the volumes and given we don't have ubiquity and such, probably not right now, right? And there's probably other things in the economy we need to do to help with that situation. I don't think we could discount it, though. I mean, that's the reality is 24/7 means now you have weekends, now you have, right? So everything kind of always happens on the weekend where something closes and gets sold. And what are you going to do when that's not a possibility really anymore?
But there's limits, I can't originate a $40 million RTP out of Fifth Third at 3 a.m. on a Sunday and have it go. There are transaction limits by both networks. And then more importantly, there's user limits. So, I mean, to get a $40 million wire out of Fifth Third probably took 2 or 3 approvals at the business side to make that wire transfer, let alone if it didn't raise red flags on the Fifth Third corporate side.
Yeah.
So
these rails are probably not where this type of money movement's happening, to your point.
Not yet, in my opinion.
What about impact of competing tokenized deposits and or stablecoin? Anyone want to jump on that one?
No, I want to jump on the PayPal Venmo one.
Okay, we'll get there. You got to hold. I'm going
I'll
on.
do it. I'll do a quick crypto one. I think when we look at faster payments as the category of faster, you've got instant, which is a subcategory of it, but you also have push to card. You've got Zelle, which can fall in that category. I think ultimately stablecoin and crypto falls into that category too. And there may be some use cases where they're going to solve faster, better than some of the other ones. So, again, to be played out. I think we've heard that answer a few different times, but I think, again, you've got each of these payments has some characteristics that's going to make it work really, really well for certain use cases. And we'll have to see how it works for other use cases.
Yeah.
And Miriam, let me just add to that one on Dean's side. You may be surprised I'm actually going to comment on this one at all. But I think one of the key things here is education. Todd touched on this before. The different payment rails have different implications. The different payment types have different implications. Education is the key, right? It really needs to start with what are they and what are they not? And what are the implications to you as a customer, whatever type of customer you are, in using that. So I think education is going to be key as we go forward to make sure folks understand what it is that they're doing and for what reason.
Yeah. Okay, this next one might be a trick question. Are real-time payments the same as real-time settlement?
We actually get this a lot. I'll take a first shot at it, and it's going to go back to Dean's comment. So we see a lot of schemas out there, right, that are, from a consumer standpoint, act, smell, feel like a real-time payment, right? It is real-time money movement. They have access to funds. They can go to the ATM and take them out. I think the difference, right, becomes that difference of liquidity management. It becomes that difference between the financial institutions. So there is a difference between a faster payment and a real-time payment that has real-time gross settlement actually connected in with the process. It's not a separate process.
Dean, I think we're gonna have to mute you. Oh, I think are we okay? We may not be.
Yeah,
Okay.
sorry. I don't think that was me, but wow. I think that there are differences. And again, I think there's real value proposition, and we firmly believe in the value proposition of the settlement process following the transaction and happening at the same time.
Yep.
So there is difference, I think, particularly in the eyes of the market.
Yep.
And in what's out there, right? So if some of us think of Zelle as a real-time payment, it's not really real-time
It's
settlement.
not real time because it's a batch settlement, typically through ACH. I mean, our RTP and FedNow, in my opinion, are a game changer for the community financial institution because yes, the transaction is posted to the customer's account in real time, but more importantly, there's settlement taking place at the same time. And then we talked about finality of the payment. And then because of the network rules, assuming there's not fraud or suspected fraud, the consumer has immediate availability of the funds because the community financial institution or Fifth Third or whomever has the funds in the settlement account, which leads us back to, the question about Zelle and Venmo. Venmo is a batch settlement. Yes, I could Venmo Philip $250. Philip sees it, but when he then goes to take the money out of the Venmo wallet and deposit it to a financial institution, that financial institution is not hooked up to real-time payments, which is, the Zelle disbursement to a financial institution on RTP is available today, and pay the fee. It's going to show up in 1 to 3 business days.
Yeah, so Todd couldn't wait for that question. So I'm
couldn't.
skipping one, but I'll go back to it. But we are gonna go to Todd's that you just answered. I think that's great. Like the additional value beyond Zelle and RTP and Venmo and Phil, I'll put my old Fed hat on. I mean, and probably because I worked there for a very long time. From an end user perspective, probably nothing, especially when you get to like the P2P realm, right? Like when I get my money through Zelle, I got my money through Zelle. I could care less. And I actually just started with request for payment for Zelle. But there is a lot of risk out there. And given our economy right now and what we're facing, just the idea of having more control and a way to better manage the liquidity of each bank and make sure we're not having anybody get into a bad position is pretty important. And as those take off and the settlement's not really happening, having rails like RTP and FedNow, where all this money is moving and it's actually moving between the banks, is just going to help our economy at scale, right? And then we're going to have higher limits, and I think a lot more use cases are going to open up. So for me, that's always been kind of the perspective of why it matters and what those added benefits are.
Yeah, the two things I would add, Miriam, to what you just said around that differentiation. One is not about differentiation, but a key lesson I learned is, one, never teach your children how to use request for payment. It's not really a fun experience as a parent. I actually did teach my children that, and they love to use it. They're high volume users of that particular capability. But all kidding aside, I think one of the other benefits that we hear in market, right, is around the reconciliation, right? And that's really important as you think about these transactions. I sometimes use silly analogies, but putting Humpty Dumpty back together again in the reconciliation process is a difficult and challenging process for financial institutions. Having that real-time gross settlement and not having to do that as a separate piece is a really big value as we see going forward.
Okay, so we only have a few minutes left. I am going to do just a few more questions. This one is really going to be a lightning round, so I'm excited. You each get one answer, keep it brief. Favorite use case that you never would have imagined before? And I'm going to say enabled by RTP and FedNow. And Dean, I'm going with you just to see if you could go off mute. But you can't. So you get to type your answer in the chat. Todd, favorite use case?
It doesn't impact me, but urge wage access.
Okay.
I work today, I get paid today.
Yep, love it. Phil?
Well, Todd took my favorite one, but I'll go to a different one. I think the emergency need to send money for whatever reason. We've heard lots of very interesting ones. Everything from the typical pay a bill, my light bill is going off, to a lot more complex things like bail, which is something that people experience today. So there's some really interesting use cases that go around disbursements as well.
So without sharing too much about myself, mine may be defunding and funding online gambling apps, wallets, but we're just going to leave that alone. Okay, the next question that we have, plans, and I'm going to I think I'm going to get one more in, guys. So I think we follow up with questions after. I'm going to have to ask the NYPay guys, but we will do this last one. Plans or processes for allowing third senders to utilize real-time payments for their merchant customers. I'm assuming that means third-party senders. I don't know if Corey's online and can come off mute to clarify, but if that makes sense to you guys, feel free to chime in. Corey says correct. So Phil, that might be for you. I'm assuming, because it's about allowing third parties, I guess not banks. Is that what the question is about?
Yeah, so I think it's unfortunately probably my answer is it depends, but on who that third party is and what their connection is. So for the FedNow service, right, you have to be sponsored by a financial institution at least. But we do have, in the market today, you have service providers and others that are in the space. So certainly that's something that, as that extends the TPS to the TPS customers of banks, Corey, I'm seeing your thing. Each of those is being evaluated based on sort of how they come together.
Okay, we are done. I love that we got so many questions, because you're always worried that you'll get to the point of questions and nobody says a word. But David, if you're on, I'm going to hand it back to you to tell us what we're doing next.
Yeah, that's me. I completely agree. Always great. We need a lot of questions, and this was a wonderful discussion for that purpose.